Make this change now. I'm your host, Steve Van Metre, and thanks for joining me today. You only have days left to do this before your portfolio gets crushed again. Let's over to Goldman, where we picked the story up with there's tactical flow of funds. Year-end rally is the biggest fear for global Wall Street now. Is a flat on the year S&P 500? No, the biggest fear is markets go up. As Goldman notes, we have entered a positive feedback loop in the last 24 hours, given the decline in inflation fears, positive measures of the reopening in China, and potential de-escalation of tensions in Russia and Ukraine. And I want people to understand is that what's going on here is the U.S. stock market is one giant momentum trade. And when you see these machines being positioned in very short positions, it's only a matter of time before they start covering those shorts and buy back into the market. Now, I want you to also keep in mind, we talked about this on last week's show, that retail investors have been piling into money markets. They're making the wrong move here. As markets go up, the pain trade for them, the risk is to their portfolio is they're going to be chasing the market to the upside. Let's continue on because I want you to see this and why you still have time to make this change. There's no FOMO or fear of missing out from clients in the market, according to Goldman, but there is FOMO, fear of materially underperforming. That's the risk investors are going to face into the year end if there is a rally, and we're going to make that case today as positioning for retail investors is underexposed, the pain trade being higher. And one of the cases that Goldman puts up is put options, as we see record institutional put option hedging. Now, if you're not familiar with what put options are, think of them as an insurance on a position or your portfolio that if it goes down, that you actually make a return, a positive return on that put option. So when you see a lot of put options, it means bets or insurance being bought on the market is at really high levels. The last time we saw something close to this level was March of 2020. Keep in mind what happened after that. The market went vertical. And here you can see again, the daily put call ratio hit the highest level since 2008. It's way off the charts compared to where it's been historically. And then when do these options expire? Well, we have to look forward to Friday when 1.7 trillion options expire. Will unclench dealer gamma, putting them in a position to perhaps start buying against the market going higher. Adding to that, corporate share buybacks are doubled what Goldman has already expected. Remember, they talked about $5 billion a day in purchases. Now that number is exceeding $10 billion a day. And why have we talked about this is because next year there's a 1% tax on corporate share buybacks. While that in itself isn't enough to keep companies from buying their stock back, they're going to front load this into the end of the year, because if we have a poor holiday season, well, the idea that they're going to be buying their stock back isn't going to look so hot. So again, look for them to accelerate their buybacks, and that is also part of the bullish flow. We see equity inflows here still chilling, but too much dollars into money market. Again, retail investors piling into money market at wildly high levels compared to normal. The real story, again, as Goldman notes, is the demand for money markets, but that will change. Because systematic flip and more releveraging, given we have taken out the medium-term trigger of 39.66. So again, last week we talked about how if the S&P gets into the mid 3,800 range and then higher, that you're going to see these machines start to cover their very deep short positions. Now they do a little at first and then they accelerate. You see S&P go over 4,000. You're going to watch these machines start feverishly short covering, and then after that, their buy signals start to trigger. And watch out again. You have the case, melt up, and FOMO, fear of materially underperforming. Goldman estimates $28 billion worth of buying global stocks just in the next week, assuming the market just stays flat. That's $5.6 billion a day. They notate that on top of the $10 billion a day from corporate share buybacks, that being positive. And how about what do we see from Nomura? Well, their desk says that they have started to short cover their equity positions and are looking to accelerate that as the market goes higher. The same for TD Ameritrade, or TD Securities, not to be confused with TD Ameritrade, two separate different companies. They too have just started covering their short positions and are looking to accelerate that. So now let's take a look at the momentum behind the S&P, what Momentum Timer Pro is saying, because again, I developed these products to try to front run these machines, because when you understand that the entire U.S. equity market is one giant momentum trade, the momentum's all you should be focused on. So here we have the S&P 500 ETF SPY momentum positive. RSI is at 62. You want to see that above 40. It is. We've got on the MACD that's got a positive cross. Momentum Timer Pro confirming both of those 19 consecutive daily buy signals. And what did we say last week on Sunday's show? Look to take a position, take one. If the S&P closes higher on Monday, it did. That would trigger a buy at open on 11.8 at 381.11. Market is closed higher now, 398.51. Upside target 413 to 414. Downside target 385.75. I'll show you why that in a moment. Now, if you're a longer term investor and you're not completely convinced that this is going to go higher, wait until the 3-month signal goes from a sell min to a buy min. That should be the signal that you're looking for. All right, now let's take a look at what's going on the charts. I've got to click through a few things here, and now we've got the chart pulled up. What are we looking at on the downside of SPY? The 6-month volume profile, that needed to break. That did. We're seeing the 21-day moving average now rally off of the supply zone that we've identified previously. The 50-day moving average is flattening out. That's positive. Where does this thing go? Well, let's zoom out to the 1-year chart. And I think we're headed right into here first, this 413 range, and then all the way potentially up to 450. We could see new all-time highs. We could get very close to that. That would be consistent with a bear market rally. All right, now let's take a look at tech stocks. And what do we have for Invesco QQQ? Momentum also positive. RSI at 59. MACD positive cross. Momentum Timer Pro picked up on the Friday report 1 consecutive daily buy signal. And what did we note last week? I said look to take a position when MTP flips positive on the daily. That would have triggered a buy it open on 11/11 to 282.56. With Friday's close at 287.96. Upside target now 293 to 294. Downside target to 280. And let's take a look at the QQQ here and see why we've got those signals. Now look at this on the 1-year chart. You've got all this volume profile. That's beautiful. That's what you want to see. Buyers down here providing support. Look at the 6-month chart. Where do you see buyers down here below 21-day moving average bottoming and starting to head up? You see the 50-day moving average starting to bottom. Next upside here is right in this little range, 292, 293, right in there. After that, you see this thing explode higher potentially into upwards of 320. And then after that, well, sky may be the limit as this thing just blasts into the 340 from there. And that's simply because you're going to see these machines, again, short cover and then start to buy. Now, if you've been waiting to get Momentum Time Pro, hang tight. Big Black Friday sale coming. So big discount. So staying tight and you'll get that then. Now let's continue on because, well, now let's take a look at the bond market and see what Goldman says for what they think most important chart in their deck is the bond market. With bond CTAs have $40 billion of bonds just to buy over the next week. Assuming bond prices don't go anywhere, they're still buyers. And of course, you bring $40 billion into the bond market, price is likely to go up. Get this, $100 billion worth of bonds to buy over the next 1 month. If the flat tape is flat, get this, if over the next month the bonds start to rally and go up 2 standard deviations, they're buying $187 billion. You know, we talk about this everything rally, and you're seeing that case being made in the bond market. Now, what about Metre and TD Securities? Well, what they note is they're just starting to cover their short positions. Nothing major yet. Again, they start small and then they accelerate to the upside. So nothing yet, but getting very, very close to seeing that move there. How about Momentum Timer Pro? It notes on TLT, momentum is now positive with the RSI over 51. MACD's got a positive cross. It's got 1 consecutive daily buy signals, and we're still noting there's no position, but if you're a dip buyer looking to buy kind of these bottoms before you're really confirmed, wait until the 1 month here flips from sell max to sell mid. Otherwise, this is not tradable yet. The next upside target I'm noting is a 50-day moving average where I expect it to be rejected. Downside target at 96. Let's take a look at what's going on here with TLT. Again, it's just starting to get some legs here, but it's still early. So unless you're a bottom fisher, this is something you don't really want to worry about. Want to wait and let the signals kind of build build here. Again, 50-day moving average right up here. I expect that to be rejected. That's very typical as a bottoming process begins. It comes up, it'll get rejected off the 50-day, pull back probably into right around here, this 97, high 97, high 98, and then you'll want to see the 21-day moving average kind of lift and flatten out and bring price up with it. So as for now, I'd say TLT is a hold, but keep an eye on that one. And of course, what do we note with the gold market? I know a lot of people are bullish on gold, and this is something we've been talking about with the subscribers, is to look at gold, because what we've been saying to them is, look, the CTAs are short covering here, and that would be a big boost for gold miners, which is our trade of the week. We'll get to that here in a moment, but let's take a look at gold, because again, we talk about this everything rally. Stocks go up, bonds go up, gold goes up, metals go up. Why? Short covering the machines in an illiquid market. And what do we see here with TD Securities? Well, we note that their positions are now starting to bring short cover a little bit, and that too will accelerate to the upside. How about Momentum Timer Pro? It's got a positive on its momentum signals. RSI is at 70. MACD's got a positive cross. It's got 5 consecutive daily buy signals. I'm still saying no position here. I expect to see a rejection at the 200-day moving average. And then what I'm really kind of wanting to see is this 3-month signal kind of pop. We notice that the 1 month is sitting at a buy minimum. Maybe when this gets to a sell minimum, I would say there's something there. But take a look at this for sure. Now let's go over to the charts and see what's going on with gold. Because indeed, if we get a rejection at the 200-day moving average, price is probably going to pull back. Notice you got the 6-month volume profile here, and that looks pretty nice. You go out to the 1 year, and you see there's a lot of volume as you get into this 200-day moving average. It's acted as resistance. So I wouldn't be surprised if you see some move up here, the machines cover their shorts a bit more, and then you see some sellers come in, push price down, and that kind of settles it. That's where you probably want to take an entry point there. Now let's talk about our trade of the week that we've been discussing with, again, our pro subscribers. Momentum is positive on GDX. RSI is at 67. You got MACD as a positive cross. And Momentum Timer Pro, 5 consecutive buy signals. And I noted the subscribers buy, and as the position goes higher, and Friday's closing is at 28.30, upside target 29-30, downside at 25.07. Very specific. Why is that? Well, let's take a look. 25.07. Let's do the downside first. Where is GDX? There it is. Let's zoom in. And what do we see? 25.06. There's your 6-month volume profile. So there's your downside support. I do expect this to move higher. And again, I also wouldn't be surprised if it gets rejected around its 200-day moving average. But notably, you see, again, there's lots of sellers, or previous sellers up here, lots of resistance right above that. So if you want to wait this one out, let it rally up here, probably gets pulled back down, and then it'll launch again. Again, the machines start to move pretty slow and then go higher from there. Now, what did we tell our pro subscribers? You're probably wondering. Well, let's go and zoom in a little bit. We told them if we got to close above the 50-day moving average to buy, we said put the stop loss down to here. It probably got stopped out. And I noted to those who did that they should look to buy if this thing moves higher. And sure enough, it has. So hopefully they've been buying all right in here. And again, if you're doing trading, you want to take small positions and buy into strength. Look for pullbacks and buy into strength. So if you're looking at this just now, expect it to go higher. So you may want to take a small position and then look for a pullback and add to that. Again, I think we're going to see a lot more machine buying here, short covering. If they go from short to long, watch out. Again, you're facing an everything rally here. And with that, I appreciate you being fans. Thanks for watching. I'm Steve Van Metre. Bye now.